Hello and welcome to XP Power. We are here to talk about the year end, the full results that have just happened. And joining me in the engineering lab, we like to get to where the business really happens in this company, is Duncan Penny, CEO. Good to see you again. And Jonathan Rhodes, Financial Director. Let's start with the money man, if you don't mind. That's partly what it's all about. What sort of a year, sort of top level report on revenues, earnings, etc.?
So another good year, 2014. We made revenues of £101.1 million. That represented an increase over the previous year of 5% in constant currency. So another strong year. We maintained our gross margins. We actually grew them slightly to 49.6%, over 49.1% the previous year. And we also managed our operating expenses quite well during 2014. So we ended up with earnings 6% more than 2013 at 101.1 pence per share.
So those are the financials. If we broaden out into the geographic sectors where you're represented and also the different sectors you're operating, what have been the highlights for the last financial year?
Sure, it's a bit of a mixed picture. We've got really quite good momentum in the US business. That grew 8% in dollar terms, which is pretty strong given the macroeconomic climate. Asia also was up 8% in the period over last year. And I guess where we've struggled more is in Europe, which was down 4%, looking at really probably cyclical issues in the economies there. But what's interesting is where we've done quite well is in some of the areas where we haven't been as active in the past. We're relatively new in Germany and Southern Europe, which is sort of counterintuitive because Germany's purportedly in a recession at the moment. Southern Europe is struggling a bit, and it's the UK where we've gone backwards, where we have a very dominant share. But I think what we attribute that to is a loss of a few programs which have gone end of life there. Looking at the sector splits, they're quite interesting as well. Again, industrial's done quite well. That's up about 8%. Medical continues to grow in constant currency. That was up 8%, and it's technology that's gone backwards. But it hasn't been traditionally things that we're quite strong in, like semi-fab. It's been, again, programs in comms which have gone end of life, which we haven't been able to replace. So when we look at the end markets, industrial and medical still very, very strong for us.
Jonathan, on the financial front, you were talking at the interim results about converting a debt situation, not a serious debt obviously, into a net cash situation for XP. How has that gone?
We actually finished the year with a net cash position of £1.3 million. And that was in spite of increasing the dividends, which we have done for a number of years now. We've had a progressive dividend policy. We increased the dividend by 11% in 2014 to 61 pence, and we would plan to carry on doing the same. We mentioned we were looking at acquisitions 6 months ago, and we have been actively looking for them. Anything that might increase our product offering or increase our engineering resource. We haven't found quite the right fit yet. It needs to be suitable and it needs to be cash generative. So we haven't quite found the right thing yet, but that is another way we'd want to spend our money going forward.
When I was here last and we were talking about your interim results, you talked about Vietnam. You'd opened there in 2012, a magnetics facility, and you were predicting really to move into industrial production in Q3. Did that happen?
Yeah, well it has. It slipped into Q4, but I'm really pleased that they're actually producing finished power supplies, power converters in Vietnam from Q4. And it looks like in 2015 we'll ship about $6 million of finished products from that facility. Costs are obviously lower than China, which puts us in a very good competitive position. And the other pleasing thing is the quality has been really good out of that facility as well. They've done a really good job in bringing that on stream.
So we always like to end by getting our crystal ball out. Let's start with a financial crystal ball. Looking in 2015, the remainder of the year and beyond into 2016, what are we likely to see as far as the financials are concerned at XP?
We ended 2014 with record orders of £105.1 million. And that's given us a really good start to the year. Our order backlog going into this year has been very strong. We've also had good program wins in the last couple of years. We've got into bigger customers, and all of that coming together should mean that we can grow the revenue again this year in a similar manner than we did last year.
Duncan, final comment from you. Are you confident that can happen and perhaps areas of expansion that we might be looking at?
Yeah, I mean, the US is probably the most interesting market for us at the moment. It's been growing consistently there. The customers are larger there, and we've got really good traction with our strategy in North America. So I'm most excited about North America, and that's where we've chosen to put more of our resource in 2015 to try and accelerate that growth in 2015 and beyond. So yeah, I'd reiterate what Jonathan says. I mean, we're pretty confident that, again, we'll be able to grow revenues again in 2015.
So watch this space. Hopefully I'll be back to ask you about that. But Jonathan Rhodes, FD, and Duncan Penny, CEO here at XP Power, thank you very much for putting us in the picture about your full year results. Thank you.
Thanks, Nick.